everyone, welcome back to FX Capital Analysis week 32 for the 2020. We're going to approach week 32 for the next week, and we're going to forecast our top pair and wildcard. Before we approach our forecasting, I'm going to drop you one mini lesson how we're going to progress for the next week. So as you know that when you approach one ascending channel, you understand that you're waiting for the price impulse at the third touch. I draw one ascending channel from here. This is example price move for the third touch, and price at the third touch. And if we know at the third touch, normally in high probability price will impulse downward. When the impulse price downward, either you enter at the risk entry or reduce risk entry if you understand our strategy in FX Capital, and we wait for the next flag. This is important to understand that for the next flag, there's a multiple type of flag that the market show us. There's a two example I will show you. One example when the price impulse downward from this area. There's a flag that I normally take this as high probability flag, which is what we call a tight flag. So if the flag create a one tight flag, which is price movement, the structure in parallel, it's easier for us to enter within the structure. And the other example or other scenario, which is always will give us 1% loss, this kind of flag, which is this flag is something flag that we want to avoid. Price impulse from this area, and price create one steep flag, which is price create one flag which is like one small ascending channel. This is one kind of flag that we want to avoid, which is, let me draw the flag a little bit clear. The flag will be like create one ascending flag, what we call is steep flag. If you enter at this position, the price will trickle up and up and up. This is kind of flag that you want to avoid after price impulse. We expect price to move up, but price create one flag, but they create one ascending flag, which is what we call steep flag. And price still to move to downward, but the price keep trickling up and move downward after take us from the trade. This is one example that I avoid normally, but this is how we approach the steep flag normally. What I'm going to show you, for example, we have our high time frame trend line here, then we will have our ascending channel from here, and price move upward, approach second touch and approach third touch, and price create a tight flag. Normally if the price create a tight flag, I will wait for the price to make another touch, which is this kind of area. Then this is one of steep flag that I approach, which is what we've combined we have a pattern within pattern, steep flag within the double top, then we sell it from here. If the price approach if price create a steep flag, for example, price create a steep flag, impulse downward, I will not enter when the price create a steep flag but not test anything. So for example, I will not enter any flag if the price only create the steep flag but not test any kind of area. Price still can move down from here without testing anything, but in large number of data, large number of backtesting that I discover, tight flag is more safest than the steep flag. Steep flag must have support by something like double top, testing area. Other than that, you need to backtesting by yourself. There's an example of how we approach our steep flag, which it can be played out on bull flag or bear flag. So that's all for our mini lesson for this week. We move to our first pair, which is New Zealand CAD. New Zealand CAD, we have this pair for few weeks. This is high time frame. Weekly, we expect price to move down. For lower time frame, for last week, you need to create one pattern separation. If you move to high time frame, you can see this is high time frame line, and price breakthrough and create one small ascending channel within the time frame. Price create one touch, second touch, third touch. So price already impulse down, create one flag on 15 minutes. This is first flag, second flag, and create a third flag. If you can see, this is tight flag that we want to enter and have a high probability winning rate. So this price create a one testing as a one flag here, one touch, second touch. If I have the opportunity when the market open, I will enter for reduced risk entry within this flag. About 38, 39 pips for agreement 6. Price to move down after that. So other than that, if price breakthrough, if price move to upward, I will wait for price development. And if price move downward, break the structure, I will looking for any flag or the flag to move downward. Okay. Next, we move to Australian dollar Japanese yen at the high time frame. Price at bigger descending channel. If you watch my trend line, that I break through one big shadow here. This is just a high volatility that we have from here. Not so if you have a very advanced price action strategy that you understand that you can cut one big shadow from here, and price have a big descending channel and price at that high probability area, and we move to 1 hour time frame. We apply pattern separation, one ascending channel, this one high time frame area. Price make a touch, double top from here and pull back at this area. What I expect from this pair is I waiting price to make a double top and sell it from here, or I will wait for price make a third touch from here, but I will wait for one solid flag and sell it from here. So that's all for this pair. We move to third pair, which is Australian dollar, New Zealand dollar. High time frame. We add bigger descending channel, approaching high probability area, but we still not approaching for that area. So we will zoom in high time frame. If we count the pips from here, it's about 80 pips towards high probability area. It's about 1 or 2 days. It's nothing, about 80 pips. So but when I draw one structure from here, it's already one touch, second touch, third touch. Brush pull back, probability create a double top at the third touch. I will sell it from here. Another possibility is price create one big ascending channel. I will sell it from here. If I want to sell it from here, I will wait for one flag, tight flag in 50 minutes or 1 hour time frame and sell it from there. Next, we move to Swiss franc, Japanese yen. For this pair, if you understand the price action for this pair, price at the high time frame has a big impulse, and if you draw one big, price will have a correction here, and we expect price to move down. But if you zoom it a little bit, price already create one small ascending channel in the middle of bigger structure. So this is one of valid trade that I willing to take. At lower time frame, price already break through one high time frame structure. If you understand the last week mini lesson, that price break through impulsively and waiting for the pullback. The price already pulled back, and I will wait for one clean or tight flag in this area and sell it from here. If price move down without me, I just let it go and let price develop. If price create one steep flag, bigger steep flag from here, and I will sell it from here. That's all for this pair. We move to pound dollar. Pound dollar for last week that we don't have the opportunity to take one valid trade from this area. Price approach high time frame, one touch, second touch, third touch, high probability area. Price already pulled back, small pullback at a high probability area. What I'm going to wait for this pair, I will wait for one clean bull flag. One clean bear flag towards the sell setup and sell it from here. So for this pair, we at high probability area. How you going to approach the how you going to maximize your opportunity in profit, because we have bigger room in here that price might move to this area, but price not move one big move impulsive like that. Price will have correction in between, has correction in between. How you going to approach this big move? You need to have a back testing data, so you will capitalize all the move from this pair. If you back testing pound U dollar, get your data from your back testing, understand the correction in between. For example, we duplicate this price action here from here. So this is one of example how pound dollar move as a price structure. If price big impulse downward, it's easier for us. If price have a one big correction, we need to deal with the correction and capitalize our movement and our profit. So that's all for this pair. This is one big mini lesson that we need to understand. If you want to capitalize, you need to deal with correction. So we will not close our trade early. Next, we move to next pair, which is New Zealand dollar, Japanese yen, high time frame. If we zoom in high time frame, this is considered one big correction. Price at the middle of the correction. So one big descending channel in 1 hour. This is one big descending one big ascending channel, one touch, second touch, price pull back exactly at the double top of second touch and create one correction, which is, if you're in community, that you understand, this is the flag with after impulse downward. So how I'm going to approach this is I will wait price to pull back in this area, wait for any candlestick formation, and sell it from here. Other than that, I will evolve in between and move my trend line within the structure. Next pair is Euro Swiss franc. Price descending channel, correctively move to downward and approaching the high time frame area. In that degree, we will zoom in lower time frame. This is example that steep flag that I give you in main lesson. So this is one big descending channel. Price approach this, testing this area and sell to downward. So what is my plan for this pair is I will wait for price movement at the third touch and sell it from here. If price continue to create structure, we wait price to test this high time frame trend line and sell it from here. That's all for our top pair. Next we move to the wildcard. We have two wildcard for this week. USDCHF, one big descending channel. If last week we put one ray line in here, but price break through the double bottom. We understand if price break through double bottom, we looking for the third touch, lower time frame. In lower time frame, I'm looking for structure for descending channel. If price create one descending channel within the structure, I will sell at this point, or price break through the descending channel with impulsive phase. I will wait for one tight flag from here and buy from here. So it's buy position. If price break through the structure without pullback, I will leave this pair. For the next week, we see what development we will get for this pair. For the last pair is pound Canadian dollar. This pair price already moved to downward, create one correction, and we expect price to pull back from here. Continuation pattern. This pair I will wait for price to develop one clean descending channel. And sell from this area. Either risk entry or reduce risk entry and sell it from here. That's all for this week. Thank you for watching. Happy trading.